Welcome back to the channel. Today we're going to give you a little bit of crypto news. I'm going to experiment with a format. I like the idea of being able to bring you some news headlines and my personal commentary within about a 15-minute video where you can just kind of get caught up what's going on in various parts of the crypto sphere. So first up, we're going to be talking about this headline here, but before we do, if you want to learn how to earn passive income with cryptocurrency, go down in the description. I'm currently earning I'm netting, I'm withdrawing over $10,000 a month right now in crypto passive income. Come subscribe to the newsletter, find out more about how I'm doing that. This headline, first one here, is incredibly important. The provision in House bill allowing Treasury Secretary to block international crypto transactions to be removed. I'm going to follow this to see if it in fact does get removed, and I'll cover that in a future video. However, this is a headline that's talking about, I recently covered this in another video when I talked about a coming crypto crash, and I talked about how government regulations, overreaching government regulations, may cause the price of crypto to crash. In fact, I think that's the only thing that's going to truly cause to slow down this long-term bull market that I think that we are on right now. When I say long-term bull market, I believe over the next 5 to 10 years, we'll see staggering numbers in the overall crypto market compared to where they're at right now. Meaning Bitcoin prices is hitting multiple six figures, Ethereum breaking 10,000, 20,000. We may see a layer 2 solution come along. We may see a true Ethereum competitor eventually. This landscape is going to change. It's going to be very, very exciting. But the only thing that I think is going to slow this down is going to be overreaching government regulations. This particular regulation was going to be serious. Again, I covered it on my previous video. But it looks like this provision is going to be removed. This is a good thing, but it's something that we have to be aware of as crypto investors. This particular provision was going to give the Treasury Secretary the ability to almost unilaterally, without anyone being able to have any true checks and balances, they were moving the checks and balances. The Treasury Secretary was going to be able to make a decision that a crypto transaction was suspicious and block it indefinitely, meaning they could potentially block cryptocurrency transactions or at least deem them illegal from things like cryptocurrency exchanges. And that was the fear. And the article basically talked about how this guy, Jerry Burrito, I forget the organization that he's with. I mentioned it in the previous video, but he basically went to bat. They lobbied against this. And it looks like for now, the U.S. House of Representative here, this Jay Himes, however you say his name, Jim Himes, so far, for now, he's going along with it. I'm always curious, like, what's going on behind the scenes? You and I both know this guy, Jim Himes, probably knows nothing about blockchain. He probably knows nothing about, cryptocurrency, decentralization. He doesn't know any of that stuff. But somehow he got lobbied. Someone paid him to put this amendment in. But you can't help but wonder, okay, so what? A simple phone conversation? What happened for him to say, thanks for working with us on this, good outcome? So what did he actually do? What was said? I always wonder, like, what's going on behind the scenes politically? This was a news headline just a couple of days ago, just to end of last week. And now all of a sudden, oh, we've had a good outcome. We've removed this, we're going to remove this amendment or whatever. Or did they agree to add another amendment later? And what might that be? You just never really know. Our founding fathers talked about we should always question our government. There could be no greater place to question our government than in crypto regulations. All right, next up, crypto's Tornado Cash fans, money laundering fears, maybe tip of the iceberg. If you're not familiar, Tornado Cash is a privacy DApp, decentralized application. Tornado.cash is where you find it at. And it's basically the best way on Ethereum or ERC20 tokens to have private transactions. You basically send your transactions through Tornado Cash. I'm oversimplifying this. And later on when you withdraw them, the transaction has been mixed and that sort of thing. So if someone is trying to follow the blockchain to see who's doing what, the problem with the blockchain is everybody can see every purchase you've ever made anywhere. And Tornado Cash adds a layer of privacy there where basically you can withdraw or transfer over to Tornado Cash. You can do whatever you want, transfer back through, and nobody can see it. So, of course, it's going to be used for money laundering. Of course. That's a given. By the way, the U.S. dollar is used for money laundering far more than Bitcoin. Always keep that in mind. I don't know. I just read this like, of course they're money laundering over there. I mean, not that the creators of Tornado Cash are money laundering. There's no evidence of that. These guys are like privacy-focused centric individuals. Billions of dollars are going through Tornado Cash. And what's interesting in this particular news story, they basically talk about, this is a problem in crypto. And I'm thinking this is a problem in all of finance. But unfortunately, they're going to unfairly target crypto here. And I think that is so frustrating. Every single time that you hear a regulation in crypto, and specifically some of these regulations are designed to protect the banking industry, but they don't ever say, hey, we're going to write a law to protect the banking industry. They say, hey, we're going to write a law to protect consumer from getting money laundered. And I'm thinking, if that's the case, why don't you write a law to protect the consumer against a banking industry that's charging entirely too many fees and far too high of interest all the time? But of course, they're never going to write that law. There's a couple good things in here in this article. They talked about how privacy wasn't illegal. No kidding, but some people want to make it illegal. We can't say cryptocurrency is better for fighting crime, but there's no equivalent data for measuring criminal activity in fiat currencies. Okay, I think this is interesting, and this is an argument that I often make, and that is when people get upset about privacy and cryptocurrency and money laundering and that sort of thing, I'm like, yeah, but the blockchain gives you more data than traditional finance would ever give you. So if you wanted to do some good old-fashioned detective work, listen, you might not succeed at it, but you're going to have a far better likely chance, because for someone to keep truly secretive transactions, not using a privacy coin, but even if they're using a privacy coin, they have to use some method of going in and out of that privacy coin. Point being, it's not super easy in crypto to try to be totally anonymous. It's a multi-step process. Now, it's a multi-step process that is possible, but it's also possible for people to make mistakes. So the idea that these governments should be against crypto because of money laundering is just ridiculous. I think this paragraph here basically summed it up perfectly. Mixing services, which is what Tornado Cash is called, still represent a slim margin for the destination of illicit crypto funds, according to chain analysis data. Yet, based on conversations with compliance officers, Greer said that customer funds sent from a mixing service can be a red flag, with firms receiving a significant amount of funds from mixers. Again, if a fund or a company wanted to protect themselves for whatever reason, very easy to get around compliance. I don't know. What's the point in this weird compliance, weird laws they're trying to create, especially when they say it's actually a small amount, but they're going to target the mixing services. I find that frustrating personally. Tornado Cash is something you should be aware of. Literally, it cannot be stopped. And the best part about Tornado Cash, I think it's a great example in all of DeFi. The idea behind a decentralized finance is at some point, theoretically, it's a fully decentralized product without an owner or a company behind it that can get attacked. That's exactly how Tornado Cash exists. It is 100% smart contract. There are developers that have maintained the project, but Tornado Cash will exist if the developers were all put in jail all at once. I think that's pretty incredible, and I hope we can get more of finance like that. All right, let's keep going. India finally warms to crypto. Of course it does, but you got to keep reading because of attacks. So I'm not going to go all the way through this story, but basically, if you know anything about India and crypto, they've went from trying to say it was illegal to all sorts of crazy negative news about crypto in India. Now they're saying, oh, we're going to warm up to it, but we're going to pay a 30% income tax on all virtual assets. There's more to the story, though. But wait, the Reserve Bank of India will launch its digital currency in the year starting April 1st. There you go. So the real reason that they're warming up to it is because they're creating their own digital currency. Of course. The second headline, I want to talk about what happens when governments attempt to ban Bitcoin or cryptocurrency in general. What happens? Is the bottom end, institutional crypto funds record second week of inflows. So if the price of Bitcoin's up a little bit today, this is awesome. The whole market's really up a good bit. Of course, the market typically follows Bitcoin. But I think this just really sums up. Despite extreme fear in the market, institutional investors appear to be reaccumulating Bitcoin using dedicated funds. One of my foundational beliefs when it comes to investing in cryptocurrencies, you have to be committed to your plan. Whether the market's going up or down, you have to be committed to your strategy, whether it's a short-term strategy or a long-term strategy. Some of my strategies are short-term strategies, but I'm committed to the strategy regardless of what the market is doing. In crypto, whether it's fundamentals that you believe in or whether there's a project that you think is going to make some sort of move in the future, I think you got to focus on your plan and you just can't get caught up in the day-to-day price action. That's really what I'm saying. And I don't mean that price action is totally irrelevant. Obviously, if you're investing in crypto, you're looking to make money. You want the price to go up in most cases. I just think you have to have a plan that where you're not getting emotionally caught up in what's happening from one day to the next. And I always say the big wins in crypto don't come from us chasing every big win. The big wins come from us being in the right place ahead of the move. In other words, the big win comes to us over time. And they point out this fear and greed index. I've shown this before. This is based on January 31st, extreme fear. For me, this means I'm investing. I try to zig when others are zagging. I try to zag when others are zigging. I'm investing. But again, if it said greed, guess what? I'm still investing. I'm investing in different parts of the market, but I'm still investing. But I love the fact that the market is fearful right now. I like that we've been kind of on a short-term bear market, and I think all bear markets ultimately are going to be short-term because I think we're on a multi-year, massive, massive bull run right now. Cryptocurrency has an impact on economies. That's why some are afraid of it and some welcome it. Now, this article doesn't go in the direction that I thought it was. It's a good article, but it just talks about, which countries right now tend to be banning crypto, which ones are friendly to crypto, and it doesn't really. By the way, this is a great part in the article. Crypto isn't entirely anonymous. But I think the most important part is this paragraph right here. Jurisdictions have grappled with the idea decentralized digital currencies provide an alternative to sovereign currency. That is the problem for most governments. And if you don't understand this, there is a great, great, great video called Money as Debt that I believe everyone of, between the ages of probably 12 years old and up should watch that video, no matter what country you're in, because it's important to understand how a lot of our countries, how our economic systems work, and it's very complex. And that video is about a 50-minute documentary style that's kind of made cartoonish, so it's very easy to understand. And it really helps people understand this. The second part, which that video also covers, by the way, and thus pose a threat to central banks' power over monetary policy. I believe this is the number one reason for regulations. Countries want to be able to control their central banks. Central banks want to be able to control a country's monetary financial policies. In other words, raise interest rates, lower interest rates, help the facilitation of debt. Most countries have tremendous amounts of debts. In fact, if most citizens of their countries all unanimously became savers, it would actually cause the economies to tank. And if you don't understand that, you need to go watch that video, Money as Debt. I actually think that's why most countries are threatened by decentralized cryptocurrency. And keep in mind, there's a big difference in a decentralized cryptocurrency and a centralized cryptocurrency, such as USDC or a Fed coin from the federal bank, or India's own digital currency, or the Chinese digital yuan. Those are centralized cryptocurrencies where the government still has the ability to print more, adjust interest rates. It's really the same system we have now, just in a digital format. A decentralized cryptocurrency is altogether something different, where there's no central authority able to control it or change it once it's set up, it's put in place. And that means that central bank policies can't exist on a decentralized cryptocurrency. No one can control it. And I think that's awesome for you and me. It's not so good for governments and big politicians and large companies who continue to benefit from a system that is rigged against you and I. Zuckerberg's dream of launching a cryptocurrency is officially over. So I got interesting feelings about this story. Basically, to summarize, Facebook figured out that there was no path forward. So regulators blocked Diem every step of the way. So Facebook, think about this, Mark Zuckerberg, a company that has those sort of financial, the financial machine, financial powerhouse, financial war chest, whatever you want to say. They had all the money in the world to be able to make this happen. Obviously, they had all the money in the world to pay lobbyists, to pay off congressmen, whatever, to be able to make this happen. And they could not get it through. On Mark Zuckerberg's part, it was a brilliant move. I mean, whoever can create a digital currency that countries or people will use stands to become far richer than any human that's currently on the planet. Is a huge power play as well. I mean, being able to control that currency, because Diem was not going to be decentralized. It was going to be centralized. Look, you and me didn't necessarily want Diem to exist anyway. Do we really want Mark Zuckerberg and his company to control our currency in any meaningful way? I mean, we want a decentralized currency, and I don't want the government to own it and run the currency, but I definitely would actually prefer the government to own the currency than a big bank like JP Morgan or a big company like Google or Facebook. I mean, that would be horrendous. I mean, talk about the room for abuse for a private company to own a cryptocurrency the world is expected to use. I mean, that would just be nuts. So regulators blocked it. Doesn't look Diem's going to happen. He actually sold, and it's going to be interesting to see what happens. He actually sold it to a bank that they were working with. So there you have it, the demise of Diem. Very interesting story here. Most people aren't paying attention to this probably. Psi Options acquires Tap Financial for undisclosed sum. So this is basically two big players making moves, or one player making moves on another player. And I say big, they're not, but so big, this space is very small. We're talking about a very small spot in DeFi, decentralized finance, for options traders. Options trading is a holy grail in DeFi finance if you want to be able to earn a solid passive return. They have something called, most options have something called options vaults. And essentially they're using options strategies on cryptocurrencies to produce yields that are much higher and far more sustainable, in fact, indefinitely sustainable than what currently exists on places like Anchor Protocol and that sort of thing. Now, it's a slightly higher risk because it's possible the APY could, go up or down a little bit. But over time, over many, many months so far, and potentially a lot of years, it's going to systematically be much higher. Options strategies can be very good if they're done in a way that is a bit more conservative. Now that's kind of weird because options are risky anyway, or can be pretty risky anyway. So none of this is financial advice. I like both of these projects, and I've actually been paying attention to this space a little bit. I haven't covered it at all on my channel. I do got a project I like better than both of Tap Financial and Psi Options. I got a project I like better than both, and I'll tell you what I like about this particular project. It's the only project that allows you to both buy and sell individual options. So right now in the options space, buying and selling options, what exists are these options vaults. Most places, there's another one called Ribbon Financial. They have like these options vaults. And some places, if you've been a long time follower of this channel, you know that I at one point in time I was invested into Gains Farm. And Gains Farm was a project that allowed you to buy options. But I've always liked the idea of selling options. And there's not been a platform that's allowed you to do that. You can sell, there is one platform that does, there's more than one, there's a couple, but there's one that's gaining traction, and I'll be covering that on a future video. So if you want to see that video, make certain you subscribe to the channel. And by the way, if you've liked these news headlines, do me a favor and smash that like button. Now I want to talk to you about a project that is about to officially launch. In fact, it's going to be launching this coming Thursday. Those of you who like DeFi, you like yield farming, you want to check out the Animal Farm. There is a link in the description. It is an affiliate link. You'll be supporting the channel. I'm going to be using this yield farm myself. Here's what I can recommend that you do. I'm going to put a full strategy to my email subscribers. I'm going to be getting that out either later today or tomorrow probably, what my full strategy is. But I will tell you what I'm going to be looking to do once I get in. If you come over here into the pools, the stablecoin and the WBNB pools tend to pay pretty high APYs. At least it did on this developer, his last project. It paid some pretty good APYs. And I'm thinking that may be the case in this yield farm as well. Plus in the farms, the stablecoin farms paid really good APYs. And again, I think that may be the case this time as well. And he has 4 stablecoin farms, so there's a lot of them. So I'm going to be definitely looking at this yield farm once it launches. If you don't know anything about yield farms, getting in early is best. What will happen is you'll see a high APY. Over time, an APR. Over time, the APR will go down. And the way it works is basically this token here, the dogs token, emitted at a set rate. Hypothetically, let's say it was 10,000 dog tokens per day. Well, the more people or the more funds that come into the yield farm, there's less of those tokens to get spread around, so to speak. So the absolute highest, I mean, we'll probably see 1,000+% APRs initially. So I'm going to definitely hop in on day one, and this thing is going to launch on Thursday. Our email newsletter subscribers will get the full details in a much more lengthy video. I'll save that for that. All right, ladies and gentlemen, hopefully you've enjoyed the crypto news today. Thank you so much for watching. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.